What's going on, traders? Hope everybody had a great day. It is Tuesday, August 29th, coming into the end of the month, and we'll be going over an analysis of the S&P 500, the Spider ETF. But before we get into that, wanted to thank all my loyal subscribers and viewers for joining me every single day as we prepare to navigate these markets. Of course, we're going to look over some daily charts and look at some intraday charts, some areas where we may want to engage the market tomorrow, manage our risk, and what to potentially expect coming into the 30th here. Also, a reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, so let's get into the charts here. And what a move by the bulls. Markets ripped higher today, up about 1.45%, about $6.40. What a move by the bulls as we have been holding this megaphone trend line pattern here, or megaphone trend line retest, I should say. And since then, we have continued to move higher. And I think one thing that I wanted to, kind of touch on, and let me go to another chart here really quickly. We were watching, of course, this head and shoulders pattern, right? But, I've talked about this before. That head and shoulders pattern is not valid unless we break the neckline, and we never broke that neckline. Usually when we see something like this too, a failed break of a pattern such as this with no confirmation, you see a really strong reaction in the other direction. Now, we were also looking at this other way that you could have looked at price action. We had the head and shoulders, but we were also looking at this compressive type of pennant symmetrical triangle here forming on price action, and that is the scenario that played out. So I think it's always important, especially when classical chart patterns are so obvious, they're almost too obvious that they never work out. Now, of course, nothing is 100% in the markets, but often I'll say that they never work out. And it's just like a watched clock never moves, right? You're sitting there, wanting, you've got a big event at 6 o'clock and you're sitting there at 1 o'clock just waiting and watching, and it seems like you get to 2 o'clock and it seems like 3 hours passed, right? But this is a great example of how our biases overall can skew our decisions in our technical analysis. And that's why I really encourage everybody to always take multiple views and scenarios into your head as you are going through your technical analysis and charting, right? We had the head and shoulders, and we also had this compressive pattern here, and boom, that's what played out. So this was just so obvious, right? And it was too perfect to kind of work out. But I don't blame anyone. Again, I got into some September puts. I actually took an ad on those September puts today, and they did close red about, I think, 40% or so. We're going to see how the week plays out. Because, structurally speaking, you certainly were, besides this potential head and shoulders, there certainly were a lot of reasons to be bearish just in the price action with the downtrend and being back under this pivot. But now we have seemed to break over this key pivot here right around that 444 area. We've talked about this level, at length, and here we are breaking over it with with authority, I should say. And now price action has recaptured that daily 9, 20, and 50. So very constructive for the bulls. We had hell of a move, almost a 60 point, 70 point move on the futures today, and so it's likely that we could see some consolidation coming into tomorrow. And let's see maybe if we get some kind of a daily bull flag start to form in here. Now, The only thing, of course, that we have to say is here, we had this huge up day, and then what do we have followed the very next day? A huge red candle taking it out. Do we get the same thing? I'm not so sure. This after this green day, I was kind of potentially anticipating another flag type of scenario, and then a potential breakout, which obviously we didn't get. We got followed by this bearish engulfing candle, but that was also right in front of a Jackson hole as well. So it was kind of a different circumstance that it is right now. But let's really watch out for that potential choppy price action tomorrow, as we saw such an aggressive move up on a trend day today. Although, I have to say, we're $6 move certainly is a nice move, but market, at least the SPY, was only up 1.5, 1.45%. So, I've seen rallies, and I'm sure everyone has, 2% on the SPY, or even 2.5%. So, could have been strong. Was it a nice rally? Yes. Was it a rip your face off rally? Kind of, in the middle, So, we'll have to see how the week closes, really. But bigger picture here, now that we're back over 444, that's going to be what we're going to have to, bulls are going to want to hold for this rally to sustain. But let's see what we get. The other thing that we could look at potentially tomorrow is the using the fractions within the candles. Let me zoom in here. What we want to see, the most ideal bullish thing that they would want to see is if we do pull back, no more than a 50% retracement of this move. So if we start to get under 50% of this bullish candle right here, then that would be considered a sign of weakness for the bulls. But as long as we hold 50%, but ideally 25% pullback within this candle inside day, and that's going to start to form us our potential bull flag for a move higher once again. So let's keep an eye on that. But very impressive move here, and a great teaching lesson in how our biases really can affect our trading psychology, our technical analysis, I should say. All right, so let's take a quick peek here. I think when we were talking about pulling over, I remember in last video as well, or maybe the one previous, that we were talking about this recapture of the 438. That was a bullish sign, in my opinion. We did close over it and pushed up higher. Again, I am still swinging some monthly September puts, which are down right now, but I will probably make a decision on what I'm going to do with that by the end of the week if we really don't start to come back lower. At the very minimum, bears are going to want to see that 50% takeout, and I'll be watching this 446.25. It's not really 50% of this candle, but it still is the 23.6 here on our bigger picture fibs. So if that does give up, that would be encouraging for the bears. But as I mentioned before, we have recaptured the 920 and 50. Now, I was never really bearish. I was just talking overall about a slight this retracement really in the markets, but bigger picture, if we go back, and kind of was talking about this on the weekly chart, we never really broke the 20, right? We never broke the 20 on this weekly. So bigger picture, yes, certainly we were still bullish overall. I thought we would get, potentially a little bit lower. September can be a weaker month overall, and at least certainly in the start of it until the end of it. And that's kind of the game plan. I was also potentially looking to work around, but here we are and moving up higher. And we are still watching these those overbought conditions. We did start obviously to cool down here on the weekly, But this can certainly go back into those overbought conditions, although granted that's not healthy, but it certainly can do it. Just looking at this weekly chart, at least, though, I think it is interesting. We're pushing back up to these value area highs, and on the daily, they've been pretty much useless. But on the longer time frame, I will keep an eye on this, see if we potentially trade up into 450. Where's value area high? Basically 451. Maybe that might be a stopping point for us. Before we potentially make a pattern like this into September. Maybe we only retrace again to 38.2. But I'm really looking here to see if we can get into the 431.50s. But we shall see how that works itself out. But back above, certainly back above this daily 9 here. So a lot of positive things for the bulls as it stands right now. All right, so let's get into some other charts really quickly and get into our daily plan. Let's go into... Okay, I think this one is worth looking at. Throw it into a weekly really quickly again. Now we're getting real close to this trend line again, so this is interesting. You can see, this was that really key important, yellow macro trend line, and that we were watching, shorted at it before. Did not work out, but here we are coming in and back testing it. This is a weekly chart. Here we are starting to come up and back test it. This is really going to be, sorry, my Thinkorswim is lagging here a little bit. This is really going to be the make or break for the bulls. And I mean, certainly, although we didn't break that neckline, we do kind of have that Quasimodo type of head and shoulders still somewhat valid here, on this bigger picture weekly chart. So although we are again structurally looking bullish, the bears do have just maybe a small chance of fighting back here, coming up on this big trend line. So does this reject? We will find out here in the next couple of days, but it is again very likely we can see some consolidation before making a potential next move. So let's see here, but coming back to test this real soon, so that will be interesting. All right, let's look at one more bigger picture chart, and then I will stop my rambling, get into some trends for our balance zones, and we'll call it an evening. Where the hell is my... Okay, here we go. Oh boy. Look at that. What a move. Just buttering through multiple pivots today like it was nothing. And let me just put this one up here. Extend this for us a little bit. There we go. All right, so we're going to want to watch, of course, obviously we've been over the 444, but talking about that 23.6 here on the other chart. Okay, this doesn't actually, it's kind of close to it. It's, well, that was at 446. So it's actually this not on this chart, but we'll be watching as well this third pivot here for the bulls. Now, I think another good thing to kind of point out here is look at this on the 28th, right? What do we have? We broke this pivot, but it was bought right back up. Failed move. From failed moves, right, come fast moves. And you can see that recapture and then boom, up higher, right? And then we were also talking, we've got our higher lows, right, being put in. So what a move. But let's see here tomorrow again. This is about that 25% retracement, that 447 area. So let's keep an eye on that. Am I going to be rushing into longs tomorrow with everything so extended? No. Did I get burned on some shorts today? Yes, I did. I was able to scalp some SPY calls, but I was trading futures short, which did not work out in my favor. I did get one futures long. It was tough, because I knew the risk to reward was so, meager. I got 6 or 7 points out of it, nothing really special. After taking, an 11-point loss. So it really didn't make a difference to me. I was able to play a couple of longs on the call side, but it was really tough, finding that, you don't want to be buying the top, But breath today was just very, very strong. Apple just ripping up, and I'm kind of salty about that because I really wanted to swing Apple into its iPhone release event, which also may propel the markets a little bit higher, right? Something we can watch out for as well. But I wanted to swing, Apple into that event and sell before, but doesn't look like it's really going to give me a chance. I'll wait to see. I'm gonna post that chart on my Twitter and show you guys some areas I'd be potentially looking at. Maybe I'll do some 190s. All right, let's get into some balances here. Let's put this, maybe I just need to create this as a 10-day as well, because I seem to always go back to it on this 30-minute chart. Because I want to look at a little bit more of the price action. There we go. I'll throw it. Okay. So, the main thing that, we're going to be looking for the bulls to hold here on an intraday basis. Now, we're coming into this half gap here. It's continuing higher in the after hours. Futures, well, they're only up about 6 points. But here we are at this 450 half gap here, whole number. We could see a pop-up high, then maybe a failed breakout tomorrow. Am I going to be rushing into longs? No, of course you got to go in with somewhat of a bullish bias, but so extended right now, we're going to need a little bit of a pullback for me to be able to play anything really long. Maybe down into this bull flag breakout right here that we got right before the end of the day. So first stop for the bulls really to hold is going to be 448 for me. Could potentially tag some 450 calls in that area. I don't know if I'll take that trade. Everybody's so interested in the bull move right now. It wouldn't surprise me at least to see somewhat of a drop tomorrow. But again, we could just trade between this 450 and this 448 and just trade here with that consolidation, very likely. And a little bit more improbable to see a back-to-back trend days. But you can never say never, because what did we get last time? A trend day up, trend day down. Does it repeat? I mean, that would be something else, right? I mean, the same pattern again. Oh, that would just be pretty funny. Otherwise, if they can't hold 448, another area I'm interested in potential longs is down by 447, which we kind of went over earlier on that macro chart, that pivot here in that 447.50, 447 area. That's going to be another spot we're going to want to see the bulls hold. But breaking that should lead us back down into these highs. Now, that's really going to be the area that we're going to want to see if bulls can hold or the bears break us under. Because if they do break us under, likely to see more selling potentially back into 445, and if that breaks, we're going to come back into this 444, and cracking that 444 would be the most the best thing that the bears would want to see. Would be quite a move though. But I also could potentially be interested in longs in that area, retesting that daily breakout area that we went over on the macro chart. So certainly an area to potentially consider longs, and maybe an area where I might take an Apple trade if we do get down there. We'll have to see. But certainly, losing that 446, I think, would be a bad sign. But one could potentially try calls here in the 445s. I'd probably be doing at the money right there, and then taking some off 46 and then looking for 47. If the markets were open right now, certainly I would consider a short up in this whole number area, but one could also potentially try a direct short or look above and fail up here in the 451.40 area, 451 to 451.40, 45 area. At that point, I probably would be either grabbing 450 puts for a move back down here, taking some profits down here at the 448s, maybe even considering going long here. But again, if that breaks, we're going to be looking here to this next balance area here, as we already went over in the 447s. Other than that, if for some reason we wake up and the markets are below 444, again, then we'll be looking, of course, a little bit potentially more bearish. But last step here would be holding these weekly opens. So have to watch also here. There's still plenty of areas that can be defended from the bulls, even if we do break that 444. We've still got Monday's highs to break under, and then we've got the lows to break under too, right by 441. So, we are pretty extended from this volume profile right now. Point of control is sitting at 439.88. Let's just see where point of control is on some of the other longer time frames. All right, this one is at, on the 4-hour 20-day, we are at, where is it? Why isn't it listed? Okay. Sitting at, it's just lined up. That 446 area, right at our half gap here. And value area high, sitting up by our top of our balance up here in the 451. So let's see. I mean, maybe we get a push up to 451 and then we start to peel over. But either way, like I said, the biggest thing is just to be careful tomorrow with the potential choppy price action. We had a huge trend day, so I wouldn't be surprised to see the markets digest this this current move and then make a decision towards the end of the week. So just be safe tomorrow. And yeah, that's pretty much everything I wanted to go over. Again, if you haven't already subscribed to the video and you're enjoying the daily plans, it would mean a ton to me if you would subscribe. If you are a subscriber or not, if you're liking the video, go ahead and smash that like button. Let me know in the comments, what do you think? Do you think that this bull rally is legitimate? Do you think we have more downside coming? Or do you think we are going to continue to push up higher into the end of the week? Let me know below in the comments. Would love to hear what you guys think. And again, thank you so much for joining me, and I'll see you tomorrow. All right, take care.